Stocks are slightly off of yesterday's highs given the kind of rally that we saw with inflation data coming in less threatening than people feared. A little bit of a breather here, at least at the time of recording this. We got the S&P 500 just slightly red, NASDAQ same thing, slightly red, and then you've got Bitcoin down about 2%. So we're seeing a little bit of a kind of a breathe in, breathe out effect here. Big move up yesterday for risk assets and now normalizing here following the big report. When we look at the overall U.S. economy, I want to show off this new feature that we just added to the Edge Finder. It's the U.S. economic heat map page. Check this out. We can now look on this page to get a general idea of a ton of US data all in one place. So for example, this morning we actually had retail sales numbers come in just slightly less than what was forecasted. We forecasted a 0.6% month over month growth for retail sales. We only got 0.4%, so slightly lower than expected here. And you can see that that went ahead and printed red. And across the board, we can see, generally speaking, most of our economic indicators here for the US are blue, showing that these things are pretty strong for the US economy as a whole. We see, for example, that this section up top here is going to be your US growth section. You've got most of our indicators here in the blue showing positive growth. And then inflation is mostly cooling. It's not, we've seen a recent kind of uptick in inflation, but some of the reports this week kind of relaxed a little bit of that inflation fear. And then finally, jobs data has been mostly pretty strong. We saw an upbeat NFP report, unemployment rate, etc. I'm super thrilled about this new page because it allows you at a glance to get an idea of how the US economy is overall performing against expectations or forecasted values versus actual. So really excited about this new feature. If you're already an Edge Finder user, this is a completely free update. It should be available in your Edge Finder copy right now. If you're not already an Edge Finder user and you'd like to pick up a copy, all of our software is available on our website, a1trading.com, or if you use the link and promo code down below in the description, you can get a nice discount off of our software. We are only going higher from here. This software tool has come a long distance since launching in 2022, and my plan for it is to become the #1 software for traders who are looking to get a better understanding of fundamental analysis, as well as track market sentiment like institutional money and retail positioning. All of that available in one platform is a superpower for traders who are trying to add insights to their analysis. So if you want to try it out or purchase a copy, all the information can be found in the description down below. So again, yesterday's reaction here to CPI was very positive for markets. We saw a big shoot to the upside for the S&P 500, which I'm personally long. The NASDAQ also had a nice bounce, and I'm very curious to see price action wise how we respond to this level. I mentioned in my stream today that I think that there's a strong possibility that we come up to this area, see a little bit of a reaction, but most likely I actually think we break this kind of downward triangle to the upside and continue the uptrend. I just showed you that new chart that I'm so proud of, and if you showed me this, I would say to you there's a good chance that the NASDAQ should be headed towards all-time highs. And we're not quite there right now, so I'm going to go out on a whim and say it. I think we're headed back to all-time highs for the NASDAQ, for the S&P 500, and possibly even the Dow Jones, which is a little bit further off of its lows. I really like the story for stocks. I also like the story for risk assets in general, like Bitcoin, where I am currently still long and building or kind of managing a position on this one. What I'm looking for, by the way, for those of you who are also watching Bitcoin with me, inside of our VIP group, we took this trade. This is a signal that I shared. I am long as of around 91,000, give or take. And my goal here is to look for a breakout of resistance here. If that happens, I'm going to lock in some stop loss, or I'm going to lock in my stop loss further into profit and continue to let this winner run. But I like Bitcoin upside from here. I personally have also said I think my target for this year is around 125,000 for Bitcoin, and I would be pretty surprised if this was the high for Bitcoin this year. And I want to go out and say something about that. When somebody on YouTube makes a big prediction, you should probably never trust them for face value. I'm saying that, and I don't know that, right? My prediction, my forecast, my educated guess, if you will, on Bitcoin is I think that we go higher. But I'm just a guy. I don't know the future, and nobody truly does. I'm just a person that does, analysis on YouTube. And the reason I point this out is because, whether it's me or somebody else, you should always make sure that you're not listening to someone else's opinion to make your own. You should, at the end of the day, as a trader, test your own systems, test your own strategy, and make your own decisions. As always, this video is not financial advice, and I know that's you hear hear it all the time, but I genuinely mean it. Like, make sure what you're doing in the markets is something coming from your brain, not trying to copy your way to success, because it doesn't work in trading. You've got to know the inner mechanisms of how your trading system works.
The inner machinations of my mind are an enigma.
The dollar index, despite the cooling inflation data this week, only modestly gave back some of its recent gains. And I want to go back to this chart once more because, again, I'm going to keep referencing it as our kind of new systematic way to look at economic data. Most of this stuff is blue. Now, not all of this is necessarily positive for the dollar index. Like, for example, inflation cooling is not positive for the dollar index. In fact, this is predominantly built for stock indices. Like, these are bullish things for stock indices, but not necessarily bullish things for dollar, right? Cooling inflation means the Fed might cut rates. That's not necessarily positive for dollar. I might do some variations of this chart at some point to be specific to US dollar, but for example, like, most of these indicators are just straight up strong for the dollar. Growth being strong for the dollar is good. Jobs data being strong for the dollar is also good. We see mostly strong data coming out of the United States. So where does that leave me? Well, it leaves me with, this is a justified pullback in the dollar, but I think that there's limited downside to the dollar index at this time. I actually would not be surprised if we break this trend line here and actually go back and test some areas like 107.5. You guys know how I feel about trend lines. I like trend lines, but I don't use them as my bread and butter. At the end of the day, I like horizontal levels of key structure much more than trend lines. So I'm looking at this trend line saying, yeah, we could break that, but I do more importantly want to watch this level around 108 to 107.5, somewhere in that range. Can we get a bounce on the dollar and continue the uptrend? I do, like I said, I think that dollar is due for a larger kind of correction. But then from there, until something cracks on this US economic data, I am not a hero. I'm just looking at the data and it's pointing more towards upside than downside, at least for now, in my personal view. And we can see that, guys, in the top setups algorithm. Check this out. If we isolate for the currency traders out there, major currencies continue, as they have been for weeks now, to favor the dollar heavily against most other currencies. We're getting bearish readings for the Australian, the Kiwi, the pound, the euro, all against the dollar. And we're getting bullish readings for dollar Swiss and dollar CAD. So I'm actively watching these charts for setups. And like I said earlier, if I take any of those trades, you'll see them inside of our Discord VIP group. We're doing 30% off right now for the VIP group, by the way. I just mentioned it, so I figured I would show this to you. If you would like to get 30% off of our VIP room, do not miss the sale. We're only doing this for a short period longer, just till the end of today, actually tomorrow. And then you won't be able to join the group for that discount. I would encourage you, if you've thought about it for a while, come join us, come trade with us. We have chat rooms. I'm speaking regularly with members that we have all over the world. We trade a wide range of markets, Forex, indices, commodities, all of that inside of the group. We have several trading analysts who lead the discussions as well as share all of their trades in depth, including myself. If that's something that would be beneficial to you, come join us, use the promo code on the screen, or if you'd like to get an extra secret additional 5% off, you can send us a direct message using the first link in the description down below or in the pinned comment. So dollar index mostly looks strong to me, but then it leaves me with some questions about gold. This is possibly the topic of the day. I'm going to go out and say I don't love upside for gold right now. And here's why. Okay, yes, inflation data was good this week, but there was a story. There was a headline that came out recently I need to discuss with you guys. So some headlines hit markets actually yesterday, which I don't know if you caught this, but the market was rallying on CPI data and then it kind of stagnated a little bit, it was midday through the session. Then it juked a second time. And this was the second time, accessing the Israel-Hamas peace deal amid tragedy, cautious optimism. So there was some progress, right? I don't know if you guys, and this is a very controversial topic, who's to thank for this. Donald Trump apparently made big claims like, if you don't get this sorted out by the time I'm in office, we're going to have serious problems. I'm paraphrasing the idea, but you guys know how Trump is. He talked a big talk about, if you guys don't sort out the war situation by the time I'm in office, then there's going to be problems. And then other people would say, well, it was a joint kind of, both sides of the aisle worked hard to make this deal possible. And again, I'm talking about this because Washington had a big component, a big part of this in stopping the kind of the tragedies that are going on over there. So we saw that, and that was really taken as positive news for the market. But gold does not benefit from peace and resolution. Gold actually thrives usually on the opposite. For example, when all of this very unfortunate stuff began over in the Middle East, right around October 7th, when Hamas kind of entered Israel and they took hostages and things, look at what happened following. There was a massive surge in the price of gold as people rushed to security, which gold kind of offers. We saw a massive uptrend in gold. But then here's the thing. I mean, also interest rates going down were to thank as well, and inflation cooling was also to thank for gold's rise. But here we go again. Gold is back up to resistance, even though we had two things right now. I guess you could say inflation helped the story for gold, right? Cool inflation was good for gold. But here's the issue. Here's where I run into not really wanting to be a big bull on gold right now myself. The U.S. economy, going back again to that lovely new chart built by our wonderful team here at A1 Trading, the U.S. economic heat map, is still suggesting that the U.S. economy is roaring, right? So really strong U.S. economic data makes that kind of uncertainty factor a little bit go away, right? Like, why would I buy gold when I can go buy stocks, right? Which are growing, companies are growing, the economy is ripping. Like, I'd rather be in stocks. And that's personally how I feel about it. Why would I buy gold when stocks are ripping, the economy looks good? If the economy looked souring, like it's worsening, then I can see the bullishness for gold. But my concern here is, okay, you lost a little bit of the geopolitical tension and uncertainty. Yes, you've still got Russia, Ukraine, but then you also have a U.S. strong economy that looks strong. So that's going to lean me towards, I think that this market fades this rally. We've been stuck in a range. And for us to really break out, and again, all I'm saying right now could be completely wrong. We could see something change for gold, and gold could pop and rip through the highs. I'm not 100% correct about markets. Nobody ever is. But my tendency here is going to lean towards, I see limited upside for gold with a very strong dollar and a strong U.S. economy and geopolitical risks loosening due to the conflict in the Middle East. So all I'm saying here, I'm not saying I'm short on gold. I do not have an interest in shorting gold because, again, it's not on my setups list. If I go take a look at the current reading for gold, let's look at metals here for a second. You can see that if we just add neutrals, that gold is strictly very neutral on the edge finder. U.S. economic data seems pretty strong. That's what's giving some negative points. Seasonality, trend, retail positioning seems strong for gold, right? So we have weakness for gold through the U.S. economic data, strength for gold on some other technical factors. So just no trade for me. And again, all I'm pointing out is that as we come into a level of resistance like this, I have a lot of hesitancy getting too bullish on gold unless you see some labor data start to cool and U.S. data kind of soften up a little bit. And I do want to also disclaim that gold is something that I love to trade myself. It's one of my favorite things to trade, but I've been a little frustrated with the price of gold because it's been range bound and the economic data has been too strong for me to really love the bullish side of gold. At the same time, there's too many risks to shorting gold in my opinion as well, so I remain kind of on the sidelines and neutral, which has, to be completely honest, been the right call recently if you're somebody who swing trades like me, because this thing has just gone choppy. So I'm waiting for true breakouts. I'm waiting for true formations of an uptrend or a downtrend to form before I really look to trade it. Like I said earlier, if I do take the trade, you'll see it inside of our VIP room. You guys know, if you've been in there for a while, that I've traded a ton of gold in recent years and plan to do so again if I can get the right setups to form once more. We spoke a little bit about currencies today, and I wanted to mention my favorite brokerage for those traders inside of the US looking to trade Forex. In the US, trading Forex is a little bit of a difficult thing. We can't, like other places that have many, many options, we have a little bit more strict options. I wanted to tell you a little bit about today's video sponsor, Oanda. I've been using Oanda personally for a number of years, and they've been generous enough to the channel here to offer welcome bonuses to our US traders watching right now. If you are looking to get access to a Forex brokerage that is regulated in the United States, check out Oanda. The link is in the description down below. And like I said, I've traded with them for years, so I would encourage you to do your due diligence, see if it's the right brokerage for you. All the information is linked in the description down below.
For me today, I was pretty much paying attention to the JPY pairs, or the euro and the Japanese yen, yesterday. And today I'm looking to see if it will continue down. So I'm just focusing on the 1 hour and this downtrend. I did have a little bit of a little flag entry here to sell, which unfortunately didn't fit the plan. just because of this large wick. Then we did continue dropping down, but now we are getting another large wick, which is a warning sign. And I want to see another drop to the downside like this. So the overall story, I do believe, is still people are still a bit on the sidelines because of January 20th, right? I think that is the date when Trump is coming into office. So maybe some people are still waiting it out, seeing which policies he will implement on day one. So for most of the other pairs, Euro US dollar is kind of flat right here. We did have the inflation rate. So I believe this was CPI. And after that, we just kind of messed around. So yeah, EJ trending down. I'm looking for sell setups. Aussie US dollar is a bit flat here as well after we had CPI. AJ is sort of not moving anywhere. Pound US dollar is also pretty flat, and New Zealand JPY is the only one that I'm potentially looking for some sell setups on as well. Because overall, I'm focusing on this part and seeing a downtrend, and I'm seeing this nice leg, a little bit of a continuation. But yeah, nothing looks that clean for me to be really interested. So being more patient, and as I said, we do have Trump coming into office, and the Fed conference is, I believe, on the 27th of January. So we will see what will happen with that. Will it be dovish, hawkish? And I'm guessing that Powell wants to see which policies Trump will implement as well. Because if there's a lot of tariffs and stuff like that, well, then he will need to readjust the interest rates to follow those tariffs. So we're still on the edge a little bit.
Yeah, no, I mean, you broke that down really well. That is very much what's happening. Is the markets are kind of sitting in angst, wondering what's coming from Trump and how will the bond market respond and the stock market respond, because there's many different directions, and we could go down that path. I'll just give a brief highlight. If Trump takes more of a direction where they're like, we need to be massive government efficiency and there's tons of layoffs and there's more systematic changes to try and reform stuff, the stock market and the market in general is not going to love that. If that is their focus, from a humanitarian standpoint, maybe you agree with that, maybe you disagree with that. But the point is, we're talking about markets here. Markets won't love that. What the markets would love is if there's heavy emphasis right out the gate, talking about, we need to get way more lenient on restrictions towards regulations, companies, monopolies, like all those things. If they like let off the brakes and just said, you guys go crazy, we just want to grow like a weed for this economy, then stocks and the economy would absolutely rip. And here's the thing, whether you like Trump or dislike Trump, the one thing about him is he uses the stock market as his personal scorecard. That's why I kind of see like there's like a limit to how much he'll do if it is something that's negative for the stock market, and there's a lot that he'll do if he knows it's good for the stock market. That's my opinion on the matter. It doesn't really matter though, because at the end of the day, in a couple days, we'll see a lot of their directive, their kind of first and foremost decision making. That being said, I kind of cut ahead of Miko because I want to ask you, Miko, and also let me take a guess. Do you like yen pullbacks? Maybe I'm feeling dollar yen, pound yen as bullish setups. That's my guess. What are you looking at, Miko?
Oh wait, wait. Say that again. Bullish setups on pound yen.
I was thinking that's my guess. You would say. I'm trying to see if you like any of the yen crosses long, because I just remember last time, but we've had a little bit of a pullback here recently. Is this more of a reversal or a pullback to you?
I'm actually still looking to short the yen pair, so I'm still looking at
gotcha.
yeah, I'm still looking at downside. So I was actually looking to short pound yen on the pullback, but it didn't pull back enough, and euro yen I missed it. It happened overnight. I'm actually looking at more downside. I'm looking to follow that momentum back to these lows here. So I'm pretty bearish on most of the yen pairs, maybe bar dollar yen. USD still pretty strong, and that one's still kind of trending up. So dollar yen actually looks like a decent buy. But pound yen,
I think that's what I was remembering is last time we were discussing it. You're talking about dollar yen's like impressively holding up despite the rest of them kind of plummeting.
Yeah, exactly that. Like pound yen and euro yen, they're actually looking pretty bearish. But dollar yen actually still looks pretty bullish. So me kind of just focusing on the charts and the technicals, this is actually a market which I like to buy. So I'm actually very much looking for the pullback of this move here, and looking for entries in this area. So dollar yen's actually a bullish setup for me, whereas pound yen and euro yen actually pretty bearish, which is kind of out of sync a little bit. But I'm going to see how the markets reacts. Maybe dollar yen just keeps falling, it doesn't react, or maybe pound yen and euro yen turn bullish. But for now, 154 is still in the area I'm looking at. We're not too far away, so I'm keeping a close eye on that. But yeah, dollar yen I'm bullish. I'm actually pretty bearish in euro and pound yen.
Here's a question for you, Miko. Is there a universe in which you have both consecutively on, like where you're long dollar yen and short pound yen? Is that possible within your trading rules? Can you have both simultaneously going at the same time?
Yeah, I mean, if let's say if dollar yen gives me a signal here, I'll take the trade, and then I'll still have the bearish bias on pound yen as long as my requirements are met. But I would only enter that position once I'm risk free on dollar yen. So it's kind of, even if it was the same direction, my kind of thinking is if I'm in a position and I can remove risk in terms of my stop loss to break even, that position is now kind of void sort of. So I'm free to enter another position. I know, of course, with the correlation, if something happens to the yen, they're both at risk technically, but because now I've kind of limited it, I'm happy to get into another position, especially with swing trading.
In some ways, you've kind of hedged out your yen
exactly
exposure, right? So
yeah,
very interesting. Yeah, I was just curious about that. Yeah, yen pairs definitely very interesting. I have not admittedly kept up with everything on that side fundamentally, but I believe that there was rumors of a possible hike. I'm not sure if there's further development on that. I'm pretty sure it's pretty close to now or has already happened, the Bank of Japan stuff. But let me just double check because I want to make sure I don't know when it's happening. Someone in the chat, find that out for us. I'm pretty sure there's like a Bank of Japan thing this week. They were discussing possible rate hikes, which would make the yen very strong. I think that's part of the reason why yen is strong right now. So we'll see. Thanks for watching this video. And on the screen right now, you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.